Good day, traders. I greet you all wherever you are in the world. Welcome to my YouTube channel. I welcome you into the new month of August, and today I'm going to make a brief analysis of the week, how we have moved so far in the week. Before we make the charting, let us go to Forex Factory. As usual, we go to Forex Factory and we see the economic calendar. Today we have red folder news on GBP. We also have red folder news on US dollar. So you really have to be conscious of this coming news in order not to be in the market and you are on the wrong side of the market when the news comes. So let's go to the chart. So far, basing on our previous analysis, our forecast was not bad. On the DXY, we had anticipated for price to come into this weekly fair value gap, and we had said that if price wants to go lower, it should respect at least the 75% of this fair value gap, which it did perfectly. You see, price came and tapped nearly to the 75% of the fair value gap and went lower. So that was our main forecast on DXY. Our bias was on to the downside, and you all know that when price wants to trade lower and has already taken out liquidity on one side of the market, it really has to go for the fair value gap on the other side of the market, and this is what it really did. Price came, took out this liquidity here, and the only remaining part was for it to go in the inside and look for the fair value gap for rebalancing. This is what it did, and it played out perfectly with the help of the news that was used as volatility in the market. Currently, we have tapped in the fair value gap and respected it. You really have to be conscious. If price wants to trade higher or lower, it has to respect the areas of fair value, which it did very well. It tapped in uh, the fair value gap and respected with ease. So if we are to trade lower, we really expect this news today, the unemployment claims, to bring in volatility, or uh, the manufacturing prices to bring in the volatility for price to trade lower on the DXY. So with that, we look at the daily. On the daily time frame, after tapping into this fair value gap, price started moving on lower. We really had a pool of liquidity here of the previous daily candles, which was used as the draw on liquidity on Monday and Tuesday and even Wednesday. So yesterday, price came on Wednesday and took out all this pool of liquidity that was resting here. What does it mean? That uh, price did its part. It took out the pool of liquidity, and most importantly, what did it do? It had to close below the pool of liquidity that it had taken. So when price closes with a full body candle below of a pool of resting liquidity, what does it show? That price is still moving in the same direction that it took the same liquidity. So we don't expect a deeper retracement back into this range. However, we expect price now to have this target as its next draw on liquidity. So all we are waiting is to see a small retracement into this range for the price to go lower. Let us see on the 4-hour candle. You clearly see that it really took this liquidity area and closed below the liquidity area, which stated that price is still moving lower, and now it is retracing. We don't have areas of fair value here that could take price lower. So that's why I'm saying that we are not expecting any deeper retracement should price want to retrace. The only area that we have is this area here, which is the fair value area. Remember, this is a breaker. A breaker price broke up on the upside, and we thought that price was still moving higher, and it again broke on the downside, and it really confirmed that this is a breaker pattern. So on a breaker pattern, the only area that we are left with is this area of fair value, the fair value area that price is respecting at the moment to go lower. So our draw on liquidity now, our target as our draw on liquidity is on the downside. So in whatever we do on the DXY, we are hopeful and we are patient enough to wait for price to show us any willingness to trade lower. Leaving that aside, let us now go to the GBP and we see whether our analysis on the DXY is still in conjunction with the analysis on the GBP. On the GBP, our bias was to trade higher this week. However, we still had these areas of concern. We still had this area of fair value, the fair value gap, and we still had another fair value gap that I had shown you earlier, which price did not respect. Why did it not respect this fair value gap? Because there was another fair value gap on the same price, the same time frame that could make price move lower. So when price disrespected the first uh, fair value gap, so it is now seeking for the second fair value gap. This is why I tell you traders that you really have to be so patient with trading, because it is a game of probability and price action shows you the intended move of the smart money. So here we really saw that price took out this liquidity very well, and whenever price takes out the liquidity, it has now to seek for internal range liquidity after taking the external range liquidity. So price is doing it very well, and we still have this fair value gap, and price cannot move higher minus taking it out for it to have momentum to go higher to the upside. So traders, that is our bias on the GBP. Let us look at the daily time frame. The daily time frame, we had this order block which we are trading now into, uh, and we still have this fair value gap on the weekly. So whenever price has a higher time frame PDRA, it really has to disrespect the current time frame PDRA in order to achieve its goal of the higher time frame PDRA. So we don't expect this order block to hold at the moment when there is this fair value gap on the higher time frame, which the weekly time frame is higher than the daily time frame. So we expect for price to first go to the weekly time frame PDRA in order to trade higher. So we expect price now to tap in this fair value gap. The depth we don't know because we still have a FOMC statement that is coming tomorrow. So we may have a deeper retracement into this fair value gap depending on the news. So that is our analysis on the daily, and we clearly see that we are still below the weekly opening price. Uh, Therefore, we cannot look for buys at the moment because we are still below our current week opening price. So in whatever we do, we are waiting to see if price can tap into this PDRA in order now to seek for the opposing liquidity, which is this liquidity on the daily. Let us look at Euro USD on the weekly. That was the same analysis we had on the weekly for price to come and tap in this fair value gap, which it did perfectly. And by the way, the euro now has an SMT. GBP has not yet tapped in its weekly fair value gap, whereas Euro USD has done so. So this is an SMT, which we shall look at in our coming videos, and it is a very big confluence for traders. So now, since we have tapped in our PDRA, the fair value gap in the internal range liquidity, what do we expect? We expect now price to seek for external range liquidity should it want to trade higher. So all we are doing now is to wait and we see if price is willing to trade according to our bias. Let us go to the daily. On the daily, we have had a big range. Price is consolidating. When it tapped in this fair value gap, it did not show a bigger willingness to go higher. Yes, it did on Tuesday. It tapped in and moved a bit higher. On Wednesday, it again came and tapped in and moved higher, but it did not close above the previous day high, which is Tuesday high. So Wednesday closed again in the range, in the same range of Tuesday. That means the price currently is consolidating. We can prove that on the 4 hour. You see now price is in the range because it is not creating any fair value gap higher. So our role as traders, we really have now to wait until price shows us willingness to move higher by creating more fair value gaps that we can trade into in order to move higher. So the draw on liquidity has been reached. Our area of interest has been tapped, and it doesn't mean that if price reaches our area of interest, we really now start buying. Price really has to show us its intention by moving higher. And how does it move higher? It really has to create more and more fair value gaps higher on the time frame that is lower than the time frame where your area of interest is. So currently our area of interest is on the weekly. That is why we had the fair value gap, which we tapped in and price rejected a bit. And on the daily, uh, price respected now 3 times. On Monday it tapped in, respected. Tuesday tapped in, respected. Wednesday tapped in, respected. However, on the 4 hour, price has not yet created any fair value gap higher. What does it show us? It shows us that we have to wait. We have to wait until price creates a 4 hour fair value gap higher for us to tap in and we trade higher. Seeking what? Definitely we shall be seeking for this buy side liquidity in a long run. but currently we are waiting. We know that tomorrow we have FOMC statement, which is a very big news in the market and could bring in more volatility. So traders, we really have to be conscious. We really have to take our time and wait for price to show us its intended intention for the market. Lastly, I'll show you the S&P 500, which I told you it is a good trending index. So our bias was for price on the weekly to come and tap in this fair value gap after seeking the external range liquidity. It had to come into the internal range liquidity, which was lying on the weekly, and it did so. The first week came down, the second week came lower, tapped in the internal range liquidity, which was our fair value gap, and it was respected. I still repeat that it was respected with ease, and the current week price came back into the same range and respected the equilibrium of uh, the fair value gap, the 50% of the fair value gap, and this made price to move higher even with the help of the news that was happening intra-week. So on the daily, we see that price is moving higher, and this was confirmed yesterday when price had to break all this resting liquidity that was on the upside, and the daily candle for yesterday closed above all this liquidity. So what does it mean? We expect the next candle to come a little bit in the range in order for it to create more price action that will more volatility that will move price to this swing high, and consequently to this swing high as our draw on liquidity. So on the 4 hour, we clearly see that price has broken this area, which was resting liquidity on the external, and now we can look for areas where price will tap in order to go higher and target this swing high and consequently this swing high. So currently we have this fair value area, which has led to the break of this structure. So we expect price now to come back and rebalance this fair value area in order for it to go higher. Uh, on this index, we don't expect deeper pullbacks, but the only fair value gap that we see on the 4 hour, we have this fair value gap, and we also have another fair value gap here. And there is another small, very tiny fair value gap here. So if price wants to trade higher, we could see a retracement into any of the three fair value gaps, but we don't expect price now to trade lower into a deeper retracement, because this index, its market conditions, it doesn't retrace so much. So we expect it to use any of these two fair value gaps in order to go higher. So it's a game of probability. We really see that it is its intention is going to the upside, because there was a resting gap here, which we call an opening gap, which it never respected. It has already disrespected this opening gap. Sorry. So if price wanted to go lower into a deeper retracement, it should have respected this fair value gap. But however, it has already disrespected it. So traders, let us wait for the market to show us its intention. I wish you the best of the week, and I really care for you, and I'm ready to give you more insights on trading. I thank you for watching this video, and may the markets move with you.